Good evening, all. Ira Epstein with your financial market wrap-up, and this is for Tuesday, the 30th of November, 2021, just around 6:35 p.m. Central Time. Well, what a day. You know, we knew the Fed Chair Powell was speaking with Miss Yellen, Treasury Secretary Yellen, in front of the Senate Banking Committee today. That was going to be one set of events. What the market wasn't ready for was the CEO, I think it was the CEO of Moderna, giving an interview to the Financial Times, because that's where I read the article. And remember, there's a time difference, 4 or 5 hours into Europe, where he said the efficacy rate, countering what the Pfizer chair had said yesterday, is probably going to get hit hard. The hope from the Pfizer chair, if you read the interview, I watched the whole thing, so I know what I heard. He thought that it'll fall, but he doesn't know how much. If it got under a 75 or a 70% efficacy rate, then they'd have to have a booster. The Moderna person made it sound, from everything I saw, as though, no, it's going to be much worse than that. That spooked the heck out of the market. You put the Dow down 600 points in no time. You had a couple of bounces along the way. Then the fait accompli took place as Fed Chair Powell changed gears. It's the first time I've seen him do that. He said it's time to drop the word transitory. So for those of you that, like the rest of us, that see a lot of prices, how do you take away increases in labor, rent? I can go on and on. The question is, how do you take that away? He said you don't, basically. But he does think that the supply chain issues will go away, and in 2022 we will see inflation fall, but the Fed is now committed. He made this very clear when asked, because one of the senators asked him, he said, you know, how could you keep throwing money at the economy when inflation is doing what it's doing? And he said, no, we're meeting and we have to speed up the tapering. So instead of saying he's going to look at the Omicron to see how bad it is and give himself that extra maybe 4 weeks to see what's going on, it was sort of a pretty strong commitment that at the next meeting, they're going to lay out and speed up the tapering. I can't tell you the date they'll decide to go with it, but it sounds to me like they want to get it done. So instead of $15 billion a month, you know, double that. Could be $30 billion that they pull back. That means money's still going into the economy, but at a slower rate, and they probably want to get this done by March, which brought right back the idea, that you can get interest rate hikes earlier rather than later. This has been such a wild shift this week that if you've caught the moves, great. If not, stay away. You're probably going to get your head handed to you, as I'm seeing person after person. Now, as the stock market went down, everything went with it today. It didn't matter if you were looking at grains. It didn't matter if you're looking at the meat market, the sugar market, the cotton went limit down. Every market you pulled out everything, because higher interest rates, what is that going to do? We're going to start pulling out the inflation, whatever. Well, just the idea, what did you think you did to the inflation barometers today? You had to kill them. You had to take them right into the toilet. Now we're going to wait to see what OPEC does. OPEC comes out this week as well, and we'll see what they do. They did not in November. I just read a Reuters poll that they had done on oil production. They didn't meet their targets for November, so they were shy about 20 million barrels a day from everything that I'm reading. We'll see what they do now. They have every reason not to increase production. We'll see if that's what they do to stabilize the market. This is a market that was just $80 plus. You're under 70 now. That's got their attention. So when you look at the S&P, have we done any real damage to the chart? I want to go on record. Absolutely not. You've done damage to our psyche. You've done damage to trading accounts of people that didn't get out of the way of the market. But on this so far, you're in a correction. You're still over the 18-day average of closes. So on a closing basis, no. We see the correction taking place here in a large way. The shorter-term trend is certainly lower highs, lower lows, bearish. The market is under the 18-day average of closes, but it's done that before. So this is not unusual. It's the weekly charts that you always look at to get a feel as to how long they stay under that. Could it sink all the way back to the 100-day average of closes? Of course it could. Where's the resistance on a rally? Probably back at the 46.60 level where it was fighting the past 2 days on those highs. But you're in a support area. You're at the lower Bollinger Band. This market has a very good record of not staying under or over the Bollinger Bands for very long periods of time. I see no difference this time around. In fact, if anything, to be a contrarian, we now know what the Fed's going to do. And once you know that with the Fed's path, you take some of that out and you go and adjust your trading strategies and so on. That's what I think is going to happen over the next 72 hours. You're oversold at a lower Bollinger Band. I think the smart money has covered shorts. That's what I think is going on. NASDAQ didn't even break down like this. It's still under the influence of taking out this high. Let me come right there for you, which was an outside day right here. And when you take that out, unless you take out that day's low, and that low was 15,988, the odds favor, where'd you get down to? You didn't take it out yet. The odds favor going back up to the upper Bollinger Band. That's all I can tell you what the odds are. You're certainly caught in this sideways action and you're stuck against the 18-day average. You have momentum down, bias down, and you're trendless on the chart. In the Dow, oversold, under the lower Bollinger Band right now. You were under the Bollinger Band on the close today. You were under the Bollinger Band, I believe, yesterday. Let's see, 35,077, and the lower Bollinger Band was 35,0977. So you have 3 days in a row under that band. It's like a rubber band. You're pulling it. You typically don't go through 5 on a close. So at any point here, I'm going to look for the market to move to the right. That is not a buy signal. It is a signal not to be pressing the short side. Does that make sense to you? I hope it does. In the Russell, it's the same thing. You didn't hold the 100 and the 200-day average, where I did think you would. None of these are embedding. They're all oversold markets. You got under 3 days in a row, the lower Bollinger Band. You're trying to roll to the right-hand side of it right now. A sign not to be short, not a sign to go long. So if any of you say, oh, Ira said you got to buy it there, it's not what I said. I said if you were sitting next to me and you're short and you caught this play, time to be out of shorts. Very big difference. Put your hands in your pocket and see what the market does. In the VIX, will you get back under and start rolling over from the upper Bollinger Band? You close 27.19, still under it. Overbought. Normally that first challenge, you get a rally like this, but you generally roll right back down. This is a different type of action right now. All the others, once they began the roll, they finished it. This one came back a little. I'd be very concerned about that. Is there going to be something else with it? Bond market, you know what I teach. I teach that the first time you hit a Bollinger Band or just about on top of it, I think the pros take their money off the table if you're not embedded. You're not embedded. 10-year note. I can go right through it. Now, what about the dollar index? Yesterday, we were here, and I'm just like this. I remember doing it with you, and I said, you know, I'm looking at the euro, and it's losing its embedded reading tonight, but it's 6 o'clock or whenever I did it. I said, you can't judge that, but it's a warning signal that maybe the market's ready to get back up in the euro, down in the dollar. And if the dollar lets go here with the number getting under 79, you're probably headed towards that 18-day average of closes. I think I did a pretty good job of that analysis, and here's the euro to prove what I said. Tell me where it went. Take a look. That's what I look for. Did you lose the embedded reading? Yes, you did. So the only time you can get that reading back would be today, Wednesday's trade, on a hard break that re-embeds it. So far, the market's not even attempting to do that. The objective's the 18-day average of closes. You have an outside day up. The danger would be taking out today's low. But the warning sign, you don't want to be short anymore. That doesn't mean there won't be a new short signal developing down the road. But the old short signal's over. Fait accompli. Finished. Done. Do we understand that? The British pound. Today, the sell in this market was perfect at the 3-day average of high. It went right to the lower Bollinger Band, and you're losing the embedded reading tonight. Warning sign, I don't think you need to be hearing me say again, maybe it's run its course. I think so. If you lose that embedded reading, the odds favor going back to the 18-day average. So we're starting to get resets in the market. I think the market's seeing what I see, and it's saying we now know what the Fed's going to do. At least we're not worried. Whatever they're going to do, it's an afterthought at the upcoming December 15th meeting. We expect the text to say they're going to accelerate. It will take something terrible in Omicron to stop that. The question is, how fast do they finish the program? That's what the market's going to look at now. In Bitcoin, you're losing the embedded reading, which often means a rally back to the 18-day average of closes. The trend is down. However, you're very oversold, and let's make sure that I'm right on what I'm saying. So if you take a look, both numbers under 20, under 20, under 20. When you get a reading over 21, I say don't be short anymore. Let me get to that. Here you go. So this was on today, Tuesday, and here's where you're at tonight. So I'm comfortable saying what I'm saying. It's not a buy signal. It's a signal not to be short. Big difference. Differential between Brent and WTI, it's going to be pretty wild as we're waiting now. At any point, we're going to start hearing what OPEC wants to do. These ministers, they got big mouths. They love to talk, and they'll start telling you what they've decided to do behind a closed door. That's just how OPEC works. The Brent here's Brent by itself. And you got 1, 2, 3, 4 days under the lower Bollinger Band if you stay down today. You were down yesterday under it, and right here, you were under it as well. So yeah, it could be your 4th day today in a very oversold, not embedded condition. Let somebody else have that. There's the percentages here of staying short for a bigger play. No way. No, they're terrible. That does not mean it's a buy signal. It's a signal not to be short. Same thing in the WTI oil. It's identical. Same thing in the heating oil market. Same thing in the nat gas. You hit your lower band today. What do I teach? So to get to where I'm teaching this, I'm offering you my Cyber Week special. You can take the charting course for free. You can take the Enhanced Bollinger Band for free. You pick which one you want with any 1-year subscription to my videos or my full research. Remember, the videos will cover either or. You can even do a combo where you get the futures and the Spider ETF. You can get the full futures of my written, what I do with that besides the videos. That's what they look like in the commentary, and there's a lot of commentary. Tonight I loaded up on my thoughts on what today was all about with Powell and what I think is going to happen going forward with OPEC. The plan starts at $156. You get 24 videos a month with that plan. With the combo, you get 48 a month. You get the written updates. My daily numbers come out. They're included for everybody, and access to all my special reports that I put out just like I did in the gold report. So how do you get it? Well, you can do one of two things. You can call my staff. They'll work with you. Or you can take your cursor, just move it up here, click on it. At the very top, an icon will appear. Click it. Everything's explained right there. Is that simple enough? I'm Ira Epstein. You have a good day. See you tomorrow.